StoneX has just released its latest quarterly commodities outlook, examining the key trends shaping global markets. The fertilizer sector, in particular, has been anything but predictable in 2025, with volatile prices, shifting trade policies, and geopolitical tensions testing the resilience of producers and importers around the world. I'm Johanna Bota, and to help us break it all down, I'm joined by Tomas Pernias, Market Intelligence Analyst at StoneX Brazil. Thomas, good to see you again.
Glad to be here.
So let's start with the big picture. So far this year, what would you say have been the main challenges for the global fertilizer market?
Well, in 2025, we faced many challenges in the fertilizer market. Persistently high prices, some of the worst trade ratios of the past few years, and limited supply both in the phosphate and nitrogen segments. And of course, investors, buyers, and sellers had to operate in an environment full of risks. After all, tensions in the Middle East escalated, bringing back fears and memories of 2022 when the war between Ukraine and Russia broke out. We must also remember the uncertainty surrounding US trade policy, because in the US, higher import taxes seem to discourage trading activity, reducing buying pressure, and creating fears of supply shortages, and potentially creating this even more challenging scenario for American farmers. Outside the US, though, there is this constant threat of sanctions or some kind of tariffs punishing countries that rely on Russian fertilizer. And this has been especially concerning for Brazilian buyers, given the fact that Russia is by far one of the largest suppliers to the Brazilian market. And another major issue in 2025 has been the lack of clarity regarding Chinese supply. The restrictions imposed on Chinese exports of MAP, DAP, and urea have been one of the main reasons behind higher prices this year. And investors will keep monitoring this Chinese issue very closely, because in the nitrogen segment, we're still expecting some buying pressure in Brazil until the end of the year. India also needs fertilizer for the rabi season, so this remains an open topic because nobody really knows for sure what will be the next move in the Chinese market. Overall, I would say that we are having a very tough year in the fertilizer market. Most of these events haven't helped farmers' situation, and many times we saw buyers trying to find ways to cope with higher fertilizer costs, whether by changing buying patterns, whether by opting for less concentrated products, whether by reducing demand, or simply by waiting for better market conditions.
I see. Well, you actually just mentioned nitrogen fertilizers, and I wanted to ask you, how have global politics and policy decisions been influencing this part of the market specifically?
In the nitrogen segment, I would point out four factors that have impacted the market. Some of them still remain concerning. First, China's exports. It is well known that Chinese authorities tend to limit fertilizer exports in the months prior to its spring planting season. And it is expected that in the next few weeks, China's exports restrictions will be reestablished. But nobody really knows for sure, because this matter is always surrounded by uncertainty. And whatever China's next move will be, it will impact the international market. Second, Indian tenders usually bring some movement and momentum to the market, whether it's downward pressure, whether it's upward momentum. And in 2025, we had several Indian tenders, which created more volatility and made farmers' decision even more difficult. Let's remember that India used to be one of China's biggest buyers, but with Chinese products unavailable for most of 2025, Indian importers have had a hard time purchasing urea in the recent months. Third, US tariff policies remain a topic surrounded by doubts. American buyers faced higher prices during 2025, and international buyers, especially those relying on Russian supply, are still concerned that US sanctions may eventually be applied. So these tariffs made buyers' decisions even more difficult this year. And lastly, the escalation of the war between Israel and Iran brought lasting impacts in the international market, because even though the war lasted only 12 days, Egypt and Iran stopped producing and exporting urea and ammonia for the weeks that have followed the conflict. So, this event, combined with Indian tenders and a tight global supply, pushed prices higher on a global scale.
I see. Thank you for that. Let's move over now to phosphates and potash, two markets that have followed very different paths this year. How would you sum up their performance in 2025?
In the phosphate sector, we had some of the worst trade ratios in the past few years. On one hand, higher MAP and DAP prices led buyers to act with caution, and in many cases, these higher prices discourage new businesses. And on the other hand, a very weak grain market made things even more difficult for end users because in 2025, farmers were already dealing with higher production costs, tighter credit conditions, and a great deal of uncertainty related to potential sanctions and tariffs. In many cases, we there were fears of demand destruction, and one of the strategies adopted was to switch to cheaper and less concentrated products such as SSP or NP compounds, given the very high DAP and MAP prices throughout most of the year. Fortunately, the potash sector offered a more favorable situation for buyers because even though prices were slightly higher than last year, trade ratios remained reasonable and farmers' decision making in the segment was much easier and less trouble than what we saw for other products. But unfortunately, even with better price conditions in the MOP market, the fertilizer sector still had a very tough and rough year in 2025.
And Thomas, when it comes to demand, Brazil remains a key player in the global fertilizer market. How has its buying behavior evolved this year?
Well, despite all the challenges we had in the fertilizer market, and there have been many challenges, Brazilian demand is showing great resiliency in 2025. Downstream fertilizer demand is higher than last year, and import data shows that Brazilian acquisitions remain firm. It is true that farmers' production costs are elevated, trade ratios haven't made buying conditions any easier. However, there is one strategy that Brazilian buyers adopted that caught everyone's attention. In 2025, Brazilian buyers increased imports of less concentrated products, such as SSP, ammonium sulfate, and B compounds, and at the same time, imports of urea and MAP, products that have been affected by supply shortages and showed a less favorable cost benefit in 2025, were sometimes the second choice for many buyers, especially those trying to find ways to minimize production costs.
I see. And one last thing before we let you go. As we look toward 2026, what are the biggest risks for global fertilizer markets and where might we see some relief?
Well, let's begin with three major risks. Firstly, ammonia and sulfur prices are increasing, and if these prices keep rising, this will impact on fertilizer production costs. This is not good news for the industry or for downstream consumers. Second, China. If China suspends fertilizer exports until its next planting season, global supply will get tighter over the next few months. We are not talking about shortages yet, but without China's products in the international market, prices tend to stay at higher levels. Third, sanctions. There is still much uncertainty surrounding US policies, and there is fear that sanctions could be applied to countries that import Russian products. However, there are some possible relief factors as well. There is some expectations that US interest rates will go lower in the next couple of months. And if that happens, borrowing costs may offer a little relief soon. And at the same time, there's also a possibility that China may grant some export permissions to its sellers. And more Chinese product available would be a relief factor for buyers all around the world. For the rest, I believe we should wait a little longer until we have more clarity on the fertilizer market.
I see. Thomas, thank you so much for your time, and thank you to our viewers for watching. For deeper insights and analysis, scan the QR code or click the link in the description to download the quarterly commodities outlook available now on the StoneX website.